Hi everyone, I'm Megha Bhandari and today's session is all about understanding the latest NFO straight from the expert, Mr. Arun Sundaresan. So welcome Arun. So Arun, what are the broad opportunities that we see in India's manufacturing sector today?
Manufacturing output is one of the major components of GDP growth along with agriculture and services output. Now, India is amongst the fastest growing large economies in the world. That in itself brings in a lot of local demand for various manufactured products, be it electronic goods, pharmaceutical products, automobiles, etc. This bodes very well for manufacturing. The second point is related to the first, which is about premiumization. So if we are talking about the fast growth of India, the per capita income of Indians is likely to go up. With that will be the demand for manufactured products, including value-added manufacturing products. So that also is a positive as far as manufacturing is concerned. The third major point is external. Many countries and companies are looking to diversify the manufacturing setup away from very specific geographies and countries. And India, with several advantages in manufacturing, offers a viable option for these companies. So therefore, both internally and externally, manufacturing in India is poised with a lot of opportunities.
So Arun, what do you think are the key drivers propelling this sector, moving forward?
So we spoke about India being a large and fast-growing economy. That itself is a big propeller as far as manufacturing is concerned. India also is blessed with a vast pool of human resources, a skilled workforce. The average labor cost is amongst the lowest in the world. The median age of Indian population is roughly about 28 years. So this vast pool of human resources, skill, available at a reasonably low cost is a boon as far as manufacturing is concerned. Our corporate tax regime also is competitive in the world. So therefore, as a combination, if you look at this, a vast pool of young population, a favorable corporate tax regime, along with that, the Indian government also has been having a pro-manufacturing stance. So over the period of time, they've been taking a lot of initiatives and policy reforms like Make in India, the National Logistics Policy, the performance-linked incentive schemes, which are meant for the manufacturing piece per se. All of these things are propelling manufacturing in India and placing India in a very good place as far as the global competitiveness is concerned in manufacturing.
So Arun, can you tell us then how is this fund different from the other thematic or sectoral funds that are available in the market?
This is a thematic fund. It's not a sector fund.
Okay.
Just to make the difference clear, manufacturing theme, this particular fund at this point in time, is spread across 10 different sectors. So within manufacturing as a theme, for example, we have auto components, we have capital goods, pharmaceuticals, metals and mining, oil and gas, etc. Like that, there are 10 different sectors. To that extent, it is diversified. It's not a diversified equity fund, thematic, but it spans across different sectors. That's an important point to note. Obviously very different from sectoral funds like a banking fund or an IT fund or pharmaceuticals. So along with manufacturing, there are other thematic funds like, for example, infrastructure or consumption funds or rural fund and so on and so forth. So this theme is very distinct and different from any of these themes. So what you are essentially doing if you're participating in this theme is you're playing on manufacturing, which spans across all these sectors. And if the manufacturing ecosystem does well and if it grows very well, you're likely to gain from that.
So do you see this fund as a cyclical opportunity or a structural long-term bet for India's growth story?
See, any equity offering should be considered for the longer term. And any equity product, even if it is diversified, could have cyclicality. There can be times where the performance can be haywire. It may not perform as per your expectations. So which is why we recommend equity investments for the longer term, so that these things can play out, the volatility can be handled. Now this is a manufacturing fund that we are talking about is a thematic offering. So theoretically it can have higher cyclicality when compared to the normal equity fund as well. because of some specific reasons not working for a particular theme, in this case manufacturing, which can happen time to time. Having said that, like I mentioned, this is not very niche. It does encompass 10 different sectors. For example, automobile, the fundamentals of automobile, the way it reacts is very different from, let's say, pharmaceutical, or for that matter, how oil and gas industry works or benefits from. To that extent, you have a reasonable diversification as well within the theme. But end of the day, it's an equity product, it's a thematic offering. Therefore, you will have to stay invested for a longer period of time. I would tend to think of this as you can, think of it from a fundamentally good long-term investment opportunity, but you should be prepared for cyclicality as well.
So how can the investors decide between ETF and index fund route while investing in this NFO?
Sure. So ETF, exchange traded fund, and index fund, these two are two different formats of passive investing itself. So in both the formats, you're taking passive exposure, which means that the fund manager is not going to decide as to what stock to buy, when to buy. We will simply replicate the underlying index, but these two are different formats. ETF, you need demat account, and the big advantage of ETF is that you'll be able to transact during the market hours at prevailing prices. So you may be able to buy it at 11 o'clock, sell it at, let's say 1:30, all of those during the day. You'll be able to do that in the ETF format. Index fund is like a open-ended mutual fund where you'll be able to transact only based on the day-end NAV. So that's the main difference. Having said that, there are a few other subtle differences as well in terms of cost and a few other things. But the main difference is how you're able to transact, which is during the day. For index, you do not need demat. SIP options, systematic investment plan options, are also easy to execute. So index fund also offers a lot of advantages. So it's up to the investors as to what they prefer in terms of their familiarity and comfort about which particular formats to go with.
Great. Thank you so much, Arun. It was a pleasure having you with us today.
Thank you very much.
NFO closes 20th August 2025. For more information, log on to the details shared below. Thank you so much for watching, and as always, stay informed, stay invested.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.